Last week, we saw the stock market come crashing lower, only to bounce back, and then we saw the 10-year yield almost get uninverted. If you guys stay with me to the end, I'm going to show you why this was such a great buying opportunity. Now, as we get into the market last Monday, it appeared that the NASDAQ was very close to lock limiting down. We saw on Monday that NASDAQ had a range of over 8,000 points, and then we see the market basically double bottom and rally up. I'm going to actually show you that part of the reason that the market was rallying up was due to outside forces. Now, we come over and look at the 10-year yield real quick. Now, we know bad things typically happen in the market when the yield curve has been inverted for an extended period of time, and once the yield curve uninverts, well, last week, we were not that far away from the yield curve uninverted. Now, that had a lot of traders and investors panicking, and we can see very evident of that by looking at the volatility index. It spiked above 65 last week, and now it's on the way back down. So is all the selling done? Let me give you the short answer real quick. No, the selling is not over with yet. We come over and look at the Dow theory sell signal. We can see it has basically still been intact. The transportation index continues to make lower highs, while we saw the Dow up here near the highs right over here. So again, that is another warning sign for the market. However, when we look at the SPY versus HYG, high yield bonds, what do we see? Well, the high yield bonds are bouncing back with a bounce back in the S&P 500. But is the S&P only bouncing up, getting ready to set another leg lower? Because ever since the last FOMC meeting, Jay Powell has basically conditioned the market. We are going to get a rate cut. However, we see Fed's Bowman sees upside inflation risk, signals caution on cuts. So what's it going to be? Will Jay Powell and the Fed be cutting rates, or will they not? We look at the Fed watch tool and we can see the market is pricing in rate cut after rate cut after rate cut after rate cut. And I want to remind you guys, when the Fed goes on an aggressive rate cutting campaign, it always ends badly, or does it? Because if we look at this article right here, why Fed interest rate cuts aren't always good for stocks. Now it says not always. So does that mean sometimes when the Fed cuts rates, it's actually good for the stock market? Well, if we come down here, if we scroll down a little bit, we look at this chart right here. Fed cuts, good for stocks, only if no recession. So let me know in the comment section down below. Are we currently in a recession, or are we about to enter a recession? Let me know your thoughts in the comment section down below. Now, if we look right here, right, look at the bottom of this graph, days from first cut. All right, we have basically 0 all the way to 250. And notice, if indeed we're gonna have a recession, right around the 150 to 200 day area, that's where the market will actually start to bounce up. So that's gonna be about 3/4 of a year. However, if we end up with no recession, look at the trajectory that the market normally takes. It is a straight screaming rocket to the moon. Then with another problem out here for the market, earnings call mentions of consumer downturn soured to the highest level since the financial crisis. So why are so many companies talking about the consumer downturn? Is it because we are already in a recession right here, right now? And as we speak about earnings, let's go ahead and take a look. We are still in earnings seasons. Now, we've had a lot of the big hitters out of the way, but later on this week, we can see on Wednesday, for instance, we have Cisco coming out, we have Walmart, we have Adhere, just to name a few. And we look at the big expected movers out here this week. We can see Grab has an expected move plus or minus 9%. Cisco is somewhere in the ballpark of plus or minus 7%. And we got Adhere coming in at about 6.5%. And let's not forget Walmart. Walmart's right in the 5.5% range. Now, if we look at a chart of Walmart real quick, we zoom this out. Walmart has pulled back off the highs as of recent. And if we go ahead and we measure from high down to the low, we see Walmart has pulled back roughly 6.58%. Now we can see the MACD indicator is also down near the zero line. It looks like it's starting to base out. However, if the stock market does indeed resume its selling, one of the areas we want to watch out here for Walmart would be this gaping gap that we have over here to the left. At some point in the future, we will come back and fill the gap. Now, is it going to be in 2024, or is it going to be at some future date? The jury is still out. Now, a bounce up to Walmart, I am very interested in this area right up in here, anywhere from about 68.80 to about 69.32, this little minus development area in the profile. If we see Walmart up and around that area, and then we start to get a rejection back down, that could actually set up a larger ABC pattern on the way down. Now, if we go ahead and we grab we go ahead and we try to draw that out, that would look something like this. A to B, B to C, the corrective leg. We project down here for D. Now, that is not enough to get us all the way down towards the gap. So do we work out some type of Elliott wave structure where it's a 5-wave pattern on the way down, bring us into this minus development area and right over into this gap? Now, last week on Monday, we saw a lot of stocks rally, and we saw the rally basically continue for the duration of the week. If we come over and we look at the NASDAQ, for example, from the low all the way up here to the high, we can see the NASDAQ was able to rally almost 7% off the lows. So what was the driving force behind that rally? Come over and look at this article right here. U.S. Treasury begins 50 billion liquidity injection as $1 trillion bond market witnesses weak demand. So think about this real quick. Once again, we have outsized forces trying to prop the market up. And this is something we always have to be concerned about, especially during an election year. We know they're going to do their best to stop the market from crashing lower. However, will they be able to be successful or not? Now, let's not forget the stock market still has other things to worry about. U.S. assets deployed to Mideast will help Israel, but will unlikely alter Iran's mind on retaliation, experts say. And at this moment, as I'm recording this video, I haven't seen where Iran has went on the offensive yet. So are they just all talk, trying to fearmonger, or are they really going to do something? And if so, we got to be very cautious as we're trading in the stock market. We can also see this week, the fear and greed index is still in extreme fear territory. And we're going to see, will we be able to swing the pendulum back this week into neutral or possibly even greedy territory? Last week, we saw the investor sentiment survey where the bears had their biggest gain for quite some time, all the way up here at 37.5. However, is it too far, too fast? Meaning, has everybody already capitulated in the market? Because right now, the market is starting to come up to some key levels, aka possible reversal areas. I want to make everybody aware, Apex 7 a massive 80% sale off all their valuation accounts, pass in as little as 1 day, and you can also get a 150K account for only $40. You can get a 250K account for only $40, and you get a 300K account for only $40. So if you want to take advantage of this offer, use the link in the description box down below and use the promo code Mike at checkout. Let's take a look at some of the sectors from last week. Energy and technology were the two sectors leading the way. Basic materials and utilities were the two weakest sectors out there. So when we come over and look at the energy sector, XLE, what do we see? Well, we've seen that retracement off the bottom. We basically had 2 days gapping lower. We set a doji-ish looking candle, and now we've been on the retracement on the way back up. We fill one gap, already about to fill the next gap. Keep in mind, we have a high volume node sitting right up here about 91.40. Also, if we go ahead and we pull our Fibonacci retracement from the swing high all the way down to the swing low, notice the 61.8 comes in right near that high volume node as well. And we got to be on the lookout. Do we simply come right up there and then we reject and come back lower? One thing to note, when we look at the MACD indicator, we can see it basically made a low, which correlates with this swing point right over here. And then now this past week, we saw a price make a new low, but the MACD indicator simply was not confirming those new lows. Now when we come over and look at materials, what do we see? Well, basically rejected right over here from the swing point over here, rejected on the way back down. Now we got to ask ourselves, is this like a bear flag-ish type of pattern? One thing to note, we can see the MACD indicator is trying to make a higher low, which is exactly what should be expected as price never came back down through those lows. We come over and we take a look at the dollar index real quick. We saw earlier last week, the dollar index was coming substantially lower. Now on Thursday, we almost made it up towards this structure breakdown point, which comes in about 103.60. all the way up here to about 103.71. If we can clear that level, that's really going to open the door that we're likely to come somewhere in the ballpark of 104.57 all the way up here to about 104.80. Now, with a rising dollar, normally that is a headwind for stocks. However, that might not be the case this time around. And as we come over and we look at the precious metal gold, we can see gold has rejected from near all-time highs, coming back down, retest the C point of what could be a large ABC pattern on the way up, taking gold to new all-time highs at a price point of $25.86. Now, in order for this pattern to be validated, we must break above the swing point of about $25.38. If we can't get above it, then you know what? This is nothing more than a big, nasty consolidation. If we start breaking back below 2,400, watch out. We're probably coming right down towards the swing points over here. We breached that. We're coming into the minus development area about 23.21. Then as we come over and we look at the IWM, the small caps real quick, notice it still has not filled either of the two gaps lower from last week. Will this week be the lucky week for the Russell 2000? Then as we come over and look at the diamonds are really having a hard time right near this 38% retracement. The MACD indicator did make it below the zero line. It's trying to firm up at this area. However, we can also see that the diamonds still were unable to fill either of the two gaps out here from last week. So will this week be the lucky week? One thing I want to caution you guys on, if we cannot get a close above the 38% retracement, this could be where the turn starts to come back down, potentially setting a double bottom or maybe even making a lower low in the market. Because when we look at this from a weekly standpoint, if we can really get the Dow down below, I'd say 378.99, that would be a case where we can set up a lower low, then we bounce back up, set a lower high, then we'll see if the real selling begins. We come over and look at the QQQs real quick, and last week, we can see we opened up near the lows of the week and we closed up near the highs of the week. MACD indicator has just crossed to the downside just a few weeks back. And normally on a weekly chart, when the MACD crosses, it can go for several weeks before it goes ahead and firms up and starts going the other way. But as I look at this chart, I got to be honest with you, I see it left shoulder, head, potentially right shoulder that could form somewhere over here, and that would be problematic for the market as well. Now that pattern would take us a lot closer to the elections before that pattern is actually formed. As we come over and look at this on the daily chart, notice the Qs were able to close one of the gaps, which is substantially different than what we saw with the Dow and the small caps. Now the question is, how much higher can we potentially go? The MACD indicator on the daily chart is trying to firm up, but I want to go ahead. I want to pull a couple Fibonacci retracement levels real quick. I'm going to measure the swing high to the swing low. Notice we've made it to the 50% retracement. Now, it's not uncommon for the NASDAQ to make it to the 61.8. If we look right above us, we have another gap at 459.54. Also, we kind of have a minus development area within the profile. Then when we grab the Fibonacci from the entire move from high down to the low, notice the 50% level matches up very closely with the 78.6. So are we going to see the Qs starting to try to rally up even higher this week? We look at the 4-hour chart, you can see we've already had the bullish cross of the MACD indicator. And on the 1-hour chart, we can see we have a 45-degree angle of the MACD indicator cross to the upside. Now, it really needs to be able to push up and out because right now we're still susceptible for a pullback in this market. We look out here on the 30-minute chart. Notice what we did, all right? Friday's range was a lot smaller than what we saw the 2 or 3 prior days before that. And on next week, I want to pay attention to this minus development area about 449.42. And the reason why I say that is if we dip down into this area, watch out. Could we basically get a rejection and we start heading back up higher before the market ultimately starts to resume its selling once again? That's what I'm going to be on high alert for this week. Then as we look at the economic calendar for this week, there's some things we need to be concerned with. On Monday, nothing. I'm not really worried about anything on Monday. We come over and look at Tuesday. Tuesday, we have core PPI coming out. Then we have Bostic will be speaking at 1 p.m. Then on Wednesday is going to be a huge day. We have the core CPI data coming out. If we get a very hot print, this could be very problematic for the market as that could basically derail what everybody is thinking about the Fed cutting rates. But if that number comes in nice and cool, that is also going to probably bolster the case for the Fed cutting rates at the very next meeting. Then we move on to Thursday. Thursday morning, what do we see? We have core retail sales coming out, the weekly unemployment claims, Empire State Manufacturing, Philly Fed manufacturing prices. Then we come over and look on Friday. Friday, we basically have building permits, preliminary consumer sentiment, and preliminary inflation expectations. And let's not forget, Goldsby will be speaking as well. Now, when we come over and look at the NASDAQ, knowing the news that's coming out, I want to go ahead and mark off some key levels on the chart. And you can basically mark this off on the 240-minute chart. Candle wick to the candle body. Now, that zone comes in somewhere from about 18,728 all the way up here to about 18,858. Now, we're not that far from that area, and we got to be very cautious because as we come into this area, one, it's going to act as a magnet, but two, that could be an area where we get a rejection back down. Now, if we start to reject back down, where do you think the most likely area is going to be? Right here near this high volume area. We start breaching that, then we got to worry about coming down towards the minus development areas and the high volume nodes that we have on the composite profile to the downside. However, on this 4-hour chart, notice we also have an A to B equals C to D pattern that has formed, which we have not hit just yet. That comes in about 18,947. And notice that comes in right near the point of control from the prior week before that. Also, as a friendly reminder, we still have that untested value area low from last week, which basically says this week we should be able to come back and test that level. Now, that untested value area low comes in about 18,803.75. We look at this week's weekly volume profile levels. We have value area low coming in at 18,062.75. We're going to have the point of control coming in at 18,503.75, and value area high will come in about 18,552. Now, one thing to note on the weekly perspective, we are closing above value area high. So if we start coming back down below it, guess what? We want to target the point of control. We want to target value area low, but I also want to be very mindful of this minus development area sitting right here about 18,300-ish, because if the market does indeed make it down towards that area, that could be an area where the market rejection comes back up. So if you're looking for the complete rotation on the way back down, just notice this could be a problem for the market the first time we come into that area. Now, as we come over and look at the SPY, we can see we opened up near the lows of last week, closing up with a big, strong bullish candle. However, we're still in the lower third of the week before's range. And could this be the start of a more meaningful push back up? We look at the MACD indicator, however, we see we are crossed to the downside, being way elevated from the zero line, which basically tells me there could be a lot more downside to come. So are we just going to rally up into some key volume profile levels before we start coming back lower? Last week, you can see we were able to breach above the 38% Fibonacci retracement on Friday. And let's not forget, we have this huge minus development area within the composite profile. Another thing to note is looking at the Fibonacci 50% level is an area where the S&P loves to retrace to. That's going to be about 537.78, which means that maybe early next week, we start to get it bounce back up. And then do we possibly get a disappointing reading out there on the CPI data, which brings the market coming back lower? Now, if we get a very strong push up, I also would not be surprised if we make it all the way up towards the 61.8 fib level. That would then have both gaps filled from last week, along with bringing price right back up here towards the high volume area on the composite profile. On the daily chart, we can see the MACD indicator is crossed to the upside. On the 1 hour chart, looking at the MACD indicator, we can see we have a good separation of the two lines. Then as we look at the 30-minute chart, the MACD indicator is basically flattened out and getting ready to cross to the downside. Now, one thing I do want to pay very close attention to is going to be the fact that we have basically a D as in dog shaped profile. Now, what that signifies to me is we are likely going to get a breakout or breakdown from this pattern. And quite often, the first way that we break ends up being nothing more than a false break. So if on Monday we're breaking to the upside, I want to look at it with one eye open and say, yeah, maybe not just yet. Maybe we're going to come down and have some downside testing. One of those areas could be right around 531.27. As we come over and look at the futures markets, however, I do like this structure area, anywhere from candle wick all the way up here to this candle body. Now that zone is going to come in from about 5432.25 to about 5452.25. Also, when we look over here to the right, what do we see? It's right within a minus development area on the composite profile as well, also giving it a little bit more credence. Then we grab our Fibonacci extension tool, measure A to B equals C to D. That gives us a price completion just below that structure breakdown point, and also right on the edge before we start getting to this next high volume area on the chart. As we look at the weekly volume profile levels, we can see that value area high will come in at 5362.00. The point of control will come in at 5344.50, and value area low will be all the way down here at 5239.00. Now, last week we had a 265 point range. The week before that was 269 points. So what are we expecting this week? Are we going to get a tighter range, or are we going to get range expansion? If so, which direction? Range expansion to the downside or back to the upside? We look out here on the daily profiles and we can see this very clearly. We had a D as in dog shaped profile. You can see we're closing right within value, and value area low will come in at 5343.50. The point of control comes in at 5368.50. Value area high will come in about 5372.50. Now, I will not be the slightest bit surprised come Sunday night. We go ahead and we run and we gap up to the upside. But like I talked about with the SPY, whichever way we first break, I always want to look at that move suspect, meaning that I expect that they could set a trap and then we come back down. Now, if they don't set one, that's fine. Then we're going to be looking to target the structure breakdown point along with that ABC pattern coming right back in to the minus development area over here on the composite profile. But note, if we're breaking above value area high, then the market simply starts coming back down. We want to target the point of control. We want to target value area low. And then from that point on, can we make it down towards this minus development area right before the value area low at 52.87? That minus development area will come in at 52.93. So again, it's all about if then syntax. Now we come over and look at this chart right here. You can see, I want to show you guys something real quick. From this little area right here, we get a little bounce on the way back up. You might say, Mike, that's not much of a bounce. That's about 19.75 points. If you want to see two ways to identify the absorption that took place down here using order flow, make sure to watch this video right here.